The U.S. Securities and Exchange Commission is preparing a major regulatory move that could redefine how tokenized stocks are traded. The agency is expected to release an innovation exemption this week that would allow digital tokens linked to public company shares to be listed and traded on decentralized platforms. This marks a shift from the current system, where tokenized trading has been limited to regulated exchanges. The exemption could permit on-chain trading of U.S. equities on crypto-native venues without full broker-dealer registration in some cases. The exemption is part of a broader regulatory initiative known as Project Crypto, led by SEC Chair Paul Atkins. It aims to test how tokenized stocks can function on decentralized finance platforms while maintaining investor protections. The exemption is expected to include specific guardrails, such as exposure limits and disclosure requirements. Platforms that fail to provide voting rights or dividend access to token holders could lose eligibility under the new framework. Regulators are also considering restrictions on platforms that omit these shareholder rights. The exemption is not a permanent solution, but is designed to function as a temporary experimental framework. It allows crypto platforms to offer on-chain trading of U.S. equities under limited conditions. The SEC's move is part of a broader effort to integrate digital assets into traditional financial systems. Earlier this year, the agency approved rules allowing 2 national exchanges to list. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Tokenized versions of select equities and ETFs through a depository trust company pilot. The new exemption could expand that framework to include crypto-native platforms and DeFi protocols. The exemption's release could signal a broader regulatory shift in favor of tokenized asset trading. However, the SEC is also setting clear boundaries. For example, platforms that do not pass through shareholder rights like dividends or voting access may not qualify under the exemption. This suggests regulators are trying to preserve core investor protections even as they experiment with new trading models. The exemption is not yet final and could still be revised, but if implemented, it could open the door for a new kind of market structure where tokenized stocks are traded on-chain alongside native crypto assets. That could increase liquidity and access for investors who want to trade traditional equities using blockchain infrastructure. The exemption could also help DeFi protocols expand into new asset classes. Some protocols have already experimented with tokenized stocks, but the lack of regulatory clarity has limited their adoption. With the SEC's framework in place, more protocols may seek to integrate tokenized equities into their platforms. However, the exemption is expected to be temporary. That means the regulatory experiment may not last indefinitely. If the program proves successful, regulators could consider extending it or developing a more permanent framework for tokenized stock trading. If it fails to deliver expected benefits or leads to instability, the exemption could be revoked or modified. The exemption's success will depend on how well it balances innovation with investor protection. Regulators will be watching closely to see how the market responds. One key indicator will be whether platforms that adopt the exemption see increased trading volume or user adoption. Another will be whether investors report issues with access to shareholder rights or transparency. The exemption could also influence how other regulators approach tokenized asset trading. If the SEC's framework proves effective, it could serve as a model for other jurisdictions. That could help establish a clearer global regulatory path for tokenized stocks and other. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Digital assets. The exemption is part of a broader trend toward integrating blockchain technology into traditional financial systems. It reflects a growing recognition that digital assets can coexist with traditional markets in ways that enhance efficiency and access. But it also shows that regulators are not simply opening the floodgates. Instead, they are carefully designing frameworks that test new models while maintaining core safeguards. The next signal to watch will be the SEC's official release of the exemption and how it is received by the market. If platforms begin listing tokenized stocks on DeFi protocols under the new framework, it could signal a major shift in how investors access traditional assets through blockchain infrastructure.